4. Before we begin our conversation, I'd like to thank our sponsors, BayCoast Bank. BayCoast Bank is just right for all of your financial needs. Visit baycoast.bank or call 508-678-7641 to learn more. And Duncan Hearing Healthcare you can trust with sites in Fall River, Dartmouth, Falmouth, and Centerville. For more information, visit their website, duncanhearing.com. As always, you can support the 27th Degree with Chris and Nancy by subscribing to us on YouTube or your favorite podcast platform, and by following us on Facebook and Instagram. Also, please remember to leave a review. So, Mike, great to see you again.
Yeah,
Great.
welcome back.
I love it.
Very
I love when you guys have me. It's always a great conversation, and excited to talk about some of the newer stuff that's around and what the market's doing.
Yeah, there's some new stuff with mortgages, which will be interesting to discuss. So.
And it's so needed right now because people are thinking, there's no way I can do a house right now. You know, they're thinking I have to save up X amount and then forget it.
It's getting tight, and you're getting squeezed kind of from all different directions with inflation and prices and values of properties going up. You're kind of getting hit from all angles. So if we can help in any way with financing and getting creative with that, I think that's information that people should know.
So before we get into that, for those who did not see you on prior shows, tell us a little bit about yourself.
Yeah, I've been in the mortgage industry for 15 years, or over 15 years, probably 17 now. I grew up in Somerset, Mass. I currently live there with my wife. I graduated from UMass Dartmouth, business management degree there. And locally, I'm usually in the Swansea, Somerset, Fall River branches of BayCoast Bank if you want to meet.
All right,
Very
that's great.
Excellent. So tell us a little bit about the topic we're going to discuss and BayCoast Mortgage, and just wrap all that up for us.
Yeah, what we do as the mortgage side, because everybody kind of knows BayCoast Bank. They know they're in the community helping with solutions. So we're a subsidiary of that. So we're on the mortgage side. They also have Plymouth Investments, BayCoast Bank, BayCoast Insurance. So we're a full service to everything financial that you would possibly need. So whether it's someone that comes to me and initially needs a mortgage, that comes with, you'll need insurance on that home that you're buying. And then obviously that's a huge investment. So if you need to talk about your assets or how you're investing, Plymouth Investments, and we can really kind of touch on everything so that you know you're situated correctly once you get that asset. I've worked there for about 9 years now, so wouldn't recommend anything else. Obviously, I'm biased, but I'm there. But
biased but honest.
Exactly, biased but honest. I like that. They just treat you. It's like a client and a customer. It's not a number and a file. And I've been other places before, and it just has been that way. So when you can come up with solutions, and it's not just approve or deny, and really try to find the best spot for these people, it's really rewarding to work for BayCoast.
So that's like, you touched a little bit upon your whole family of financial solutions. So that's kind of nice to get all that in a one-stop. Because it's just not, do I qualify for this mortgage?
Yeah, it's a world of difference, because I work with the same people every day. So the BayCoast Insurance peeps that I work with, I can put them in contact with my client. It's an easy handoff, and we're a well-oiled machine to where even if you get a quote from BayCoast Insurance and you find a quote somewhere else, that's totally fine, but at least we have something to compare it to, where you can be under one roof. We're familiar with everybody. Everybody likes to go to the branches. We have almost 30 branches locally, and we lend in 11 states. So it's not even just Mass and Rhode Island. We're really down the eastern seaboard all the way to Florida. So we have solutions, whether people are buying second houses or being a snowbird or whatever it may be, to go down to Florida or whatever it is. We have insurance solutions, investment solutions, and mortgage solutions, really to cover you and your whole life. So you're trusted if you're under that name.
So if you lend in, say, Florida, if you have a home in Florida, is there an office in Florida, or does it work from the Mass
So our brick and
office?
mortar, our southernmost office is in Rhode Island.
Okay.
So we don't technically have a brick and mortar.
But you're licensed in those
Yeah,
other
so
states.
we're
Okay.
licensed in those states, and we lend down to Florida, the Carolinas.
Got it.
We actually have a mortgage lender in Florida. He's been there for years. There's no brick and mortar that he like sits in,
Right.
but he's very familiar with the area also. So I do a lot of business in Florida, and he helps me out with
Okay.
certain areas or recommendations down there. So we really kind of bounce stuff off each other and use each other as resources to get you the best spot.
And everything's under the BayCoast Bank umbrella.
Yeah.
So the mortgage, the insurance, it's all under that.
That's what we hope for. And then
okay.
in no part of the transaction are you pressured to do insurance with BayCoast or
No.
do a deposit with a checking or savings to get a better rate. We don't do that. We give you the best rates based on just coming to us as a client.
Okay.
We do want you to have your money with us, so it is convenient, and whatever we need to bring in all of your business or your investments, we will gladly do to treat you as good as we do at the mortgage company.
I guess the point I was getting at, the mortgage company is owned by the bank?
Yes, correct. We're a subsidiary under the same umbrella.
Okay.
So we operate in the same building.
Okay.
We are the same technical company. We're just a subsidiary of them. Our funds and our servicing come from the bank. So like when you go to a mortgage lender, they try to get you the rate.
Right.
A lot of people always tell you, 2 months you sold my mortgage. Now I'm with
Yeah.
this bank or Bank A in Minnesota.
And it's a different feel.
And you just feel like you got tossed off. That
Yeah.
doesn't
I
happen
think
with
that's
us.
what I was trying to get. So if someone has a mortgage with your company, they can have the confidence that it's supported by the bank.
Yep.
Which has a great reputation in the community.
Yes.
And do you end up selling your mortgages to other?
So it really sets us apart because the servicing aspect of it is something we want to do. Like
Okay.
if it's important to you, we'll make a note in the file and we service it. Over 30 years of the loan, there are certain programs that do get serviced or investors, sometimes jumbo products or things like that. But in any of it, what I tell my clients, I have clients from 10, 12 years ago, call me, even if at some point your loan got sold, which in BayCoast is very rare. If it
Okay.
did, call me. I'll help you get to the bottom of if there is an issue. And then if rates drop, we'll gladly refinance you
Nice.
back into the bank. If using one of those servicers for a certain program to fit unique property or something like that, we want to get you the best deal. So just keeping it in-house, if that's important to you and it wasn't happen to be the best rate, I'll give you both options. Say, this investor has this rate. This is ours for this program just because you have a niche thing. But
Right.
it's important to you to be here, I do want to offer you that option where it's serviced by us.
Nice.
Yep.
Mike, so we have kind of a smorgasbord
Yeah.
of things we're going to be talking about today. So we're going to be covering the accessory dwelling units. We're going to be talking about why BayCoast is, what sets them apart from other mortgage lenders. We're going to talk a little bit about your community stuff, but then we're going to talk about first-time home buyers and improving your credit scores and how you qualify for a mortgage. So where does it make sense for you to start? You want to just talk about like mortgages in general first and then go into or do you want to do the ADU first?
Yeah, the ADU topic is definitely an important one for us because it's solving a huge problem in the Northeast right now, especially in Massachusetts. So I think the time well spent on that is key. Touching on just general mortgage and kind of intro to that might be a good place to start as we touch on that. But the ADU, I think, should be like the meat and bones of the podcast because that's what I'm seeing right now. I'm putting on seminars, educating. We had Seekonk, Swansea, Somerset, all the planners from the towns in the seminar giving the presentation with us.
Nice.
And we presented at a local venue, and there was over 100 people that showed up from the community that needed to learn about it because they were taking notes. Like, it was very important to them to say, I need to provide a housing solution, whether it be for an elderly family member or a kid, or we need more room and we can't buy another house because prices are up, rates are up. So I think touching into that is going to be the most important part. But as far as the mortgage and the credit and the qualifying, I think we should start there just because that's important.
All right.
Yeah.
Okay, sounds good.
So then talk to us about mortgages today. What a broad stroke question, huh?
I know. I mean, it's so funny because the news, I feel like, starts in a cycle. So, like, on the bank side and on the mortgage side, we'll see a trend. We'll basically try to get it out there to our customers and to our clients who are pre-approved. Like, here's what's happening. Here's what to expect with rates. And then you see the mainstream media with the 7 o'clock news. They're always like 3 or 4 weeks behind in like hitting you with that topic. So like people will then start to call because they had the nightly news on while they were eating dinner or whatever. And they'll call me and Mike, what's going on? I'm like, well, that was 3 weeks ago. So you almost can't follow that trend because things are ever changing, with whether it be tariffs or just anything changing the market. You're seeing things spike, the 10-year bond moving. So like rates are very volatile right now. So as a buyer, that's stressful. So having the right person in your corner as far as a loan officer, I think, especially with a lot of experience, that can give you advice on do this, don't do this, on don't worry about this trend because the inventory is not high enough for you to worry about what the rate's doing right now. It's finding the house that fits you, and then we'll figure out the rate later. You just got to find the property that when it comes up, you really kind of have to act fast now because within 3-4 days, if the property's anything worth buying, you're going to have multiple offers just because there's nothing to buy.
You know, I remember in our last podcast too, you were talking about that and how your timeline is like super quick.
It has to be because in this market, our underwriting is in-house. That's the biggest advantage that we have. So I can walk up to my underwriter. There can be a credit decision in the same day if needed, and we can close you within, 7, 10, 12 days. That's not normal, but 30-day closes are no issue for us. The appraisal is kind of the slowest part. But if we need to put something on a rush to prioritize this borrower to get this timeline to sell their house at the same time, it's something we do on the regular because, like I said, it's kind of a well-oiled machine. If things need priority, we can move them up, and I'm not emailing somebody who's underwriting the loan in the South and say, hey, can you get back to me within 24 hours? Like, I will literally walk up to the decision maker and say, hey, this is the situation. Here's how we need to cater to it. And this is the closing date. And it puts everybody on the same page.
It seems like that system there has a much less risk for miscommunication too.
Yes.
Like you just got everything. And if you don't, you're like, all right, butta.
I can't stress the importance of it, especially with realtors these days. Is you have people that have been in the business for a while. You have people that are just starting out and they're getting very busy because their age group is buying a lot of homes. So you're dealing with a lot more parties and licensed realtors now, and the communication needs to be key between all parties because you got, whether it's the attorney, the 2 realtors, me, the appraiser, like there's 6 people that need to be informed at all times on any changes. So I think working with the bank, I'm kind of the shot caller where telling the realtors we need this, this, and this on this timeline, because I think me and the attorney kind of coordinate the whole timeline and getting it closed on time. I can't remember the last time we had to extend a contract because of a date that was missed or a timeline or a financing issue. It really is only off of like moving a date because someone needs to sell and buy on a certain day because they don't want to move twice. You know what I mean? So that's the only time really things get moved, and usually they get moved up. So we're constantly catering to everybody's dates to move things up a week, 2 weeks, and delivering for them. It's really, everybody's so thankful, and that's how we've earned the trust of all the local realtors in the market.
Nice.
Yep.
So I guess, do you want to hit on just a few points for what people that are looking to buy a house will kind of need, and we'll keep that brief and revisit it later and then go into the ADUs? Yeah,
that'd be great.
Okay.
Because, I mean, a majority of buyers in this market are first-time home buyers now because I feel like that age group has grown. Now it's like 22 to 40. You know what I mean? Like people just haven't bought, and they could be 40, 45 years old, whether they were just waiting for timing or the bottom to drop out of the market, or waiting for after marriage so that they could have dual incomes to see what they were going to buy and how much they would need. I find that the first-time home buyer is a lot older now than they used to be. So that gap, people don't know that they can take advantage of first-time home buyer incentives that we have. If you haven't owned a home in the last 3 years, you're eligible for those again. So you could have owned in 2001 and sold and didn't buy again. Now you're in that first-time home buyer bucket where you can
know that. Did
where
you
you
know
can
that?
take advantage of it. Yep.
I didn't know that.
I didn't know that either.
Yeah, I mean, I see that a lot where if there's a divorce situation or something like
Right.
that, the people don't want to buy immediately because they're like, I need to be close to my kids or wherever.
Yeah.
They wait those couple of years and then they come to me and they're like, all right, I'm ready to buy. They're in school, they're situated, and it's been 3 years, and I'm like, all right, you can take advantage of these 3 things or these 5 things that are now available to you. So a lot of people don't know these facts, and I think educating them on that is crucial. And that kind of goes along with the credit aspect on here, where people are almost afraid to have that initial conversation because of a life event that happened, whether it be a bankruptcy, a divorce, which ruined their credit, or a bill that kind of just got lost, or whatever it may be, and it killed their score. So they don't want to have that conversation until they look tip top. It's really not like that now, because not only is half my job really coaching you on what to do and doing that credit aspect of it, I actually have a program that tells you do this, this, and this, and your score will go up 60, 70, 80 points on the dot. We like 2 months ago, it was a person who was about 81 points. They didn't need all 81 points, but to qualify, I went from 530 to 610. That put them in a bucket where they had more programs open to them.
Nice.
And we did it in about a month and a half. He goes, I didn't even know those 2 things existed.
Yeah, because
Yeah.
if you're not in that I
Yeah.
guess it's like you don't know. You're just thinking,
Yeah.
I got to pay off this bill. I got to pay off this bill. I got to pay off this bill.
Yeah.
And you're not.
And people are so afraid to pull their credit because they hear their score is going to go down,
Yeah.
but they don't check what's actually going on in their credit report until it's time to finance something, and then that's the last time that you want to be checking that. And if it's unknown,
Right.
like whether it's financing a car or a house, I mean, you've already have the prize in front of you, and you're like, all right, I guess I'll take the higher rate because I want the car. It's right here. We already worked out the deal. You know what I mean? So having that and doing that coaching is honestly half of my job. And I coach people that even have decent credit scores. I say you can get it up to 785, 800 just by doing these 1 or 2 things, or keep this balance below 20% of what you're allowed to borrow. And a lot of the times it'll be people paid every bill on time. They use one credit card and they pay it off monthly, but it racks up to a high percentage of what they're allowed to borrow.
Yeah.
And the snapshot of when that score updates
Right.
monthly, if it looks like it has a big balance, it looks like you're utilizing credit incorrectly, where you're maxing out your only card.
Right.
So like keeping it at that 20, 30% or lower actually boosted his score from like 740 to 785.
That's
So are you
crazy.
better off to have more than one credit card and put a little on each, or is it just add up anyway to the amount of credit you're taking?
It
totally
kind
for
of
the month?
It kind of depends on what your habits are. So like if you're someone with a business, or you
Yeah.
do have a lot of expenses, and you're taking advantage of all the rewards from cards, where you put everything on a credit card and then you pay it off with your bank account at the end of the month, so no interest was paid. If what you're spending, because you'll see, usually it's within $1,000 every month what you're spending on that card with all your expenses. If you see that that's above 30, 40% of what that limit is, you could either call the company, boost the limit, which they'll
Okay.
probably do because you probably have a good pay history if you're paying it monthly. Then you'll be under that 30% mark and they want you to borrow more, so they'll increase the limit. Or you could get another card and then alternate and split the
Right.
balance, and you're still getting both rewards, and your percentage of what you're allowed to borrow will be less.
Okay.
Yeah.
That makes
Nice.
sense.
You just don't want to tip that like 50% mark, because then it's looking that you're dangerously putting things on credit cards because you're not using credit correctly.
Okay.
So, just before we get to the assisted dwellings, like what's the range of like if a house is 500,000? Like what do people kind of have to have in the bank, or there's so many different programs?
Yeah.
You know, like can like, you know, cuz everyone's thinking, "Oh, 20%." You know, but
Yeah, no.
that's crazy.
I rarely have anybody that puts 20% down. It's almost never, and it's usually when they're selling something because they made a lot of profit. They're going to buy the next house. That's where they have the big down payment, or 20% or
Yeah.
more. Everybody that doesn't have a house or just sold a house is pretty much putting 3 to 10% down.
Okay.
So first-time home buyers, 3% down. We have multiple programs that go that route. You still get a very low interest rate, probably sometimes the lowest in the market because you're a first-time home buyer. And there are plenty of, whether it be mass housing or other products that we have that you can take advantage of to even have a lower payment, whether it be no PMI or low PMI, to keep the payment as low as possible. But I would say generally most people are putting between 3 and like 5% down in 80% of cases,
Nice.
just because they don't know what expenses they're going to have when they get in the house. So they're like, I'd rather have
Hate
it
that.
than have my payment be $50 to $80
Yeah.
lower. Let me
Yeah.
keep that for the lawnmower, the furniture, the
Exactly.
taxes, or whatever it is.
Right.
And I think that's very smart of them. And when rates, hopefully, let's fingers crossed, we've been waiting, but if they do come down, when you do refi and you still have those funds, you could pay down the principal if you ever wanted the lower mortgage payment. And even if you didn't refi, you can do a principal reduction where you can bring that chunk of money if you're comfortable, pay down the principal, and we'll re-amortize it to a lower payment and on the same rate if you wanted.
Oh, I didn't know that happened.
Yep.
I thought no matter, like, I thought you were stuck with that payment for like the rest of the loan life.
Anything over like $5,000 that you put on the principal,
Yeah.
if you want the payment to adjust and be lower, we can do that for you. We just re-amortize it. The reason people, like if you are every year putting money on it,
Yeah.
you shouldn't do that because you don't want it re-amortized. You're trying to take years off the loan.
Yeah, yeah.
So don't re-amortize it because you want the payment to be the
Right.
same and then just
Yep.
chunk it off. And then you'll
Exactly.
take
That's what I always do.
5, 6, 7
Put
years.
a little more.
That's the
into
smart way to do it.
principal and just it would run out quicker.
Yeah.
One extra payment per year should take off 6 to 7 years off your mortgage at the end, if it on a 30-year
On a
loan.
30-year.
Yeah.
Yep.
Good to know.
Pretty remarkable.
Look at
Which
you,
is
smarty
huge.
pants. You've been doing that all along.
Yeah. Most people use their
Once in a while, I
tax
do something smart.
tax returns, you know what I mean? Sometimes like I have this lump sum, rather than waste it on something that I'm going to do, I'll have 6 years off. I can retire earlier or whatever it is.
Exactly.
Yep.
And these are
Nice.
things to think about.
Yep.
Yeah,
definitely.
smart. So let's jump into the accessory dwelling units. I've been calling them assistants.
I
Really,
just-
Yeah,
accessory,
yeah.
I
accessory
didn't- it's
dwelling
funny, I didn't even know
units.
this existed. About 2 weeks ago, I heard this term.
What are they, and why is it such a big deal now?
So the problem created a solution, and now it's taken off to where I have like at least, I would say almost half my deals involve money for an accessory dwelling unit now, because you had a problem, especially in the Northeast, Massachusetts especially, where there's just no inventory. There's no houses for sale. So the people that need to move, which are downsizing, or they need more room because their family's growing, or they have a mother or father who's elderly who needs to be somewhat close to them, and maybe their house is too big for them to live in alone, so they can move in. So some people can't bring in parents into their current home and stay sane, you know what I mean? It needs to be a separate unit where it's close by so you could take care of and assist them, but also it's separated to where you can have your family and they're not in your business at all times, you know what I mean? So the solution, Mass has changed the ADU laws to where you can add up to 900 square feet on your property. It could be attached to what you currently have as a home. You could do it as a separate building. You could do it in a basement. You could do it. I see most people basically like doing a 2-car garage and then putting that unit over the garage. Now, it's not just for catering to your family and bringing them in. You can get rental income from this unit. So that's kind of the big change too, because you saw a lot of towns didn't want to make single family houses 2 families and 3 families in like Somerset, Seekonk. So they were pushing back on, no, we're not adding a bunch of buildings to your property. You're a single family house, and you'd have neighbors complaining that all these now there's multis in my.
Sure.
So this ADU guideline or law has changed to where now if you were going to add a garage with a room over it, now you could rent it out, and that could supplement income that will offset the mortgage payment now that your mortgage payment's higher with higher rates and buying houses at higher purchase prices. This really helps people afford the higher prices with the higher rates.
That's interesting.
I have so many questions for
Yeah,
you.
hit me with them. I'm ready to go. Rapid fire.
So you said that it doesn't have to be family related. So if I have a friend and he looking for a place to stay, like it in zoning, I'm just thinking like I live in Somerset too.
Yep.
And like zoning's good with this now. Like they're gonna be like, when I have to bring this plan of mine.
It's very easy to do it. So we
Really?
met with the planners in Swansea, Somerset, Seekonk, and it's permitted. It's very quick to get the permit. I think I have like
And my neighbors aren't gonna get mad about this.
I mean,
Like,
it can't
they're
be a
gonna be like-
monstrosity because it's only 900 square feet. So
Right. Oh, that's true.
it's
too,
not
right? So
you're
it's
not adding
controlled.
like the double
Yeah.
size of your house, but some of the
Yeah.
ranches in Somerset
Yeah.
are 1,000 square feet. So like
Yeah.
adding that, you still have to have the room for it, and you still can't be like right on your property line.
Yeah.
So and like if you did have a septic or something like that, it would
Yeah.
have to meet those guidelines for health. But if you have the room for it, it's very easy to get permitted.
I really like that. So, and
It's
if you
huge.
have a small lot, like it doesn't, like as long as if you're like not near the property line, not on top of
Yeah.
the septic tank, like
Most
you can
people would
take up
attach
as-
it to their current house if they have
Yeah.
a small lot, because
Yeah.
it'll add it, but they won't have to like do too much and creatively make a space for it. You know what I mean?
So the tiny homes like they sell on Amazon.
Yeah.
Can like do they fall under this? So like that's weird. Like how do
Like
you?
300 square foot home, you're adding 900
Well,
to
no,
it.
they're like
Yeah, exactly. Actually,
they
if
sell
it-
this like
if your-
$15,000
Yeah.
house or something.
If your
you know?
house was
Like a
less
tiny
than
home.
900, you couldn't more than double it. So if it
Yeah.
was like 7, you couldn't add 9. You'd have to do 7. But the tiny houses on the financing side would get really tough because you have to own the land.
Yeah.
And it has to be a permanent foundation. So
Okay.
somebody
No, but
could
I'm
bring
saying,
in the
like,
tiny
I could
home.
follow like
Yeah.
all these things and
Oh,
say
yeah.
I want like an assisted dwelling, but
Yeah.
like I'm just gonna have my contractor build a foundation and
Yeah.
kind of like attach it to my house. But I really like this one that I swiped right on.
Yeah.
You know?
I agree with you because in my head for the past 6 months or whatever, a year that this changed, I've been spinning my wheels because I have the room for it.
Yeah.
I don't need right now. Hopefully I will have kids very soon.
Yeah.
But I don't need the room for it. And I'm like, I could rent it out.
Yeah.
Or I could put a golf simulator in there. Or whatever, you know what I
right,
mean?
whatever.
It could be something that is built and it's going to increase the value of my home. If I ever sold it, people are going to love that they have that unit to rent out.
Exactly.
Yeah.
I mean, just if you have friends from out of state that want to visit, they have
it's
like
huge.
a whole contained like little suite.
Very
you
true.
know?
And with so many people Airbnb and everything
Yeah.
now, if you were in a spot, that would be a no-brainer.
This is very
You
exciting.
could Airbnb your home.
Yeah.
Like a little piece of your home.
Yeah.
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 I'm sure your neighbors would love that. in Somerset.
I'm not like an Airbnb person to be a host. Like I don't mind going to Airbnbs, but I don't want to.
It takes a certain person.
Yeah. But
Yeah.
I'm just like, because I remember, gosh, like years ago, we were thinking of having my parents like move in, but like you couldn't even get a second kitchen in your
Yeah,
home.
right.
You know, like
the
that's how
key.
tight
The kitchen,
it was.
like especially if you're gonna rent it out to somebody, you're gonna have to plan it with a kitchen. So if it's a kitchen and a bedroom, that's gonna be
Yeah.
900 square feet. That's gonna be pretty tight. But kitchen, living room, bedroom, you could probably, if you did an L-shaped kitchen, I think you could rent it out, and especially in Somerset for over $2,000.
You know,
Primacare is Southeastern New England's trusted leader in medical care. With offices in Fall River and surrounding communities, we're dedicated to your well-being. Our carefully selected team of more than 150 providers offers world-class primary and specialty medical care. Primacare doctors are supported by a skilled staff trained to deliver comprehensive radiology, imaging, and testing services. Primacare is large enough to take care of all your medical needs, but small enough to care for you personally. Primacare is by your side.
it's great too because housing is so tight. Like my daughter bought, I'm putting in quotes for those people listening to like the podcast and not YouTube, but like she bought a 2-bedroom. Well, that 2-bedroom doesn't qualify as a 2-bedroom for various reasons.
Yeah.
But now, like with this, like if she goes to resell her home, she can probably add this on and get her money back. I mean, because when you go from like a 1-bedroom to a 2-bedroom, that's huge.
Oh,
you know,
huge.
probably even like a 2 to a 3.
Yeah.
But you know,
It is a big jump.
Yeah.
And like, especially if you're not putting it in the basement, if it's above grade,
Yeah.
it has to count as a bedroom and about. So they're still going to check everything like your septic. If you have a 2-bedroom septic, you're going to have to they'll figure that out.
Yeah.
But if it's like town sewer and
you kind of have it made in the shade.
you're kind of good in these towns if you have town utilities and the septic.
So talk to me about the discussions that you've had with the different towns because they were so tight on this stuff, and all of a sudden you're like, hey, guess what?
State, though,
you
right?
know?
Yeah, it was so the state made the towns basically. Here's how it's gonna be, and it's gonna be a lot easier. And they are honest. They have been awesome. They're very professional. They know their stuff. So when you go to them, it's very timely. Like it used to be like, oh, wait for the next zoning meeting or whatever it is. No, this is quick because you have so many people in need of housing that it's expedited. So I had one. It was a thought like a month ago. We're closing next week as like plans are done, permits there, everything's ready to go.
So now that, rents are so expensive and people are having difficulty renting space, do you think rents will perhaps even be more affordable for people as time goes on if there's more of this that goes on?
That's the plan, because once you'll have the more inventory and housing that's available to people, it's going to get less competitive for every unit. So if you have an ADU that you're renting out and so do 10 people in your neighborhood,
then
you can't charge $3,000 now because there's other options right down the street. You know what I mean?
Right.
Yeah.
But right now there is still a major shortage. You see that by just people that list apartments, they rent in a second.
And I'm amazed at what people are paying for rents these
Nuts.
days. It's and not even really for
It's crazy.
great places.
And
in
like
many instances.
it's wild because everybody was waiting for the train for like 5 years, and this rent increase has been going on, and that does contribute to it, but it really is just an inventory shortage.
Yeah.
The train helps with convenience to Boston, but like the rent is rising, and just the people and the value of homes rising. People need more rent to cover the mortgage payment.
So you've seen a lot of this? Like this is what you do?
Oh yeah, the ADU is like the most. I have probably 2 or 3 conversations a day about it, just with people like inquiring just to say, how easy is this going to be to finance? Is it going to be too hard? Like there are options for it, are very easy. You can take out a home equity line if you have equity in your home now. You can do it as a reno loan where we just do a mortgage. We see the future value after you complete it, and we use that value of how much your home's going to appreciate by adding this. And we would do it like a construction loan where there's disbursements to you and you pay the contractor. So there's multiple ways to finance it, and I think every situation is different. So like I would advise people to have the conversation with me, because the solution I had yesterday for somebody was totally different than last week, who was in a totally different situation, didn't have as much equity.
When did all this start, the ADUs?
So there was a lot of rumblings and things changed, I would say, the beginning of last year.
Okay.
But I think everything has been, they've seen it more, like the town planners have seen it so much in the towns that they know, like, all right, we got to do this, 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 and the building inspectors are on the same page. They're inspecting, like, whatever, nightly almost, honestly, because there's so many of these projects going on.
Interesting.
So you said sufficient equity. Help me define that.
So to use a home equity line, that's kind of what I was referencing. So like if you have a mortgage and it's 50% of what your house is worth, then you can access 30% up to that 80% mark in a home equity line if you want it. If you don't need it, you could still take it out and not use it and have a zero balance, but you have it in case of emergency or to add an ADU or whatever it is.
All right, so let me back up. I want to understand this. So let's say your house is worth $1 million.
Yeah.
Because you looked on Zillow.
You can get a line of no. I'm not saying that. It's just a. You want to get you're getting a home equity.
Yeah.
You can get up to 50% of the value of the house. Is that what you're saying?
80 after your mortgage.
80 after your mortgage. Well,
So
that's
like
a lot. Okay.
if you owed 500 on $1 million, you
Yeah.
could get 300,000 on a home equity line.
Okay. Got it. Okay.
So when you apply for it, I have people that apply for that, whatever the max is, and then never use it. I've had a home equity line since 2000 that I've never spent $1 on.
Okay.
So how does that do you
just no
eventually just be like, okay, it's been like 15 years, give it back now? Or does
So,
your credit always stay open?
So a home equity line for the first 10 years is a draw period. So you can draw on it and then pay on it as much as you want. The monthly payment is interest only on just what you use. So if you needed 10 grand, you take 10 grand. The interest only payment on 10 grand is like $100 or whatever it is. So like you would have that. You could make bigger chunks to pay it down. But for the first 10 years, it kind of works like a credit card. Right. And then after year 10, it turns into whatever you have for a balance. It just turns into a 10-year loan.
Now,
What if you don't have anything on the balance, but year 11 you take out some money? It goes in. It's just
So it would be basically you'd want to just probably re-up the HELOC to extend that draw period.
Okay.
Because we would just have a conversation about it. Basically, that's what I'm gonna have to do.
And if you have your value of your home goes up. So let's
Yeah.
say you have a HELOC.
good
Value of your home
question.
goes up, and your line of credit is worth so much.
Yeah.
Can you then alter it so you can have more of a
Yeah,
draw?
you would just apply to have it increase. So they'll just make sure that your income is still qualifying for if you drew the whole thing,
Yeah.
and we would just make sure and then increase the line.
Is there like charges and fees?
No,
and
there's
all that?
on a HELOC. There's no closing costs. So
Okay.
that's the best part of that solution. Is if you do like a reno or a regular mortgage, it involves like an attorney
Sure, yeah.
filing a deed and doing a title search and all that. So that route is a little more as far as cost. They're in the loan, so you don't pay them out of pocket.
Right.
But on the home equity line, it is a nice solution because you could have it there for convenience and there's no closing costs.
Okay.
I have a technical question.
Yeah.
So if your house is in a trust, you can never get like loans on it, right? Because it's in a trust.
If it's revocable, you could do it.
Irrevocable. But irrevocable, you can't.
Yeah, no.
It's the revocable.
You'd have to take it out.
Yeah.
Yeah.
Yeah. I have another question too. So I have a pool. If I wanted to do a pool house, this would be kind of good too.
This is my
because you
life
can
right now. This
do-
is what I've been I've been talking to
Yeah.
contractors about making this ADU possibly a pool house because I have a
Yeah.
pool. Why not have
Well,
a
and then you
kitchen
don't
and a
have-
bedroom in there?
Yeah, like
Yeah.
you know these little kids that tramp all through your house, and you get like big wet stains,
Yeah.
you know, from all the
Just close
pool
the doors
dripping
and
off
forget
it.
about the mess
Yeah,
until
and then
later.
they can just hang out in there, play their
Right.
games,
Yeah,
and not
there you
messing
go.
up your house, walking in and out.
That's
and,
great.
You know, and then you know you got like an outside bathroom.
I see a pool house in your future.
Well, it's just in like when John's working out in the
telling you,
yard
it's great.
too. It's like he's all
Yeah.
gross and sweaty and everything. And
you don't wanna let him back
why?
in the
No,
house.
just
Tell
go
him to sleep
shower
in the pool house.
Right, there you go.
Well, no, he doesn't have to sleep there. But he can
That's
at least
funny.
like
No, that's
shower
perfect.
and like wash up there before he.
It would be
destroys my
super
nice, clean
convenient.
house.
That's honestly
Yeah.
the biggest part of that whole thing. And I am seeing those projects too
Yeah.
because once people find out about it, they're like, why wouldn't I do that?
There's so much flexibility you can do with this.
Really, the
so-
red tape was stopping people before because they were
Yeah.
like, my neighbors have got to like oppose it
Right.
if I put a structure.
Yeah, those
Yeah.
are the first things I think of. But it's funny because we live in back of a liquor store actually, and they just did an addition onto the back of there. Not an addition, a separate separate dwelling in the back of there.
Trying to think where this is
thing.
now. You said
It's,
Somerset.
It's Somerset Liquors, right near
yeah.
Nancy's Bakery.
Yeah.
Is that what it's called? I think it is.
You know, yeah, it's
But they
county.
did-
county.
Yeah, in county
yeah,
street. So they just did a separate dwelling.
Yeah, it
in
was.
the
It's like a
back.
garage company, isn't it? I think. Or what is a garage?
It is a garage. I think it housed like store their extra
Yeah,
liquor
put it right there
and
behind it, yep.
like when you cash in the bottles
Yeah.
and stuff. But they had, Eli owns it, and he was saying they had so many people come up to him and ask if they were renting that out, like for like an
The
apartment.
garage? Oh, because above it?
Yeah.
Oh,
and
wow.
he said so many people came to him and asked that. So when you're like housing, like people
Yeah.
are looking for solutions.
So you probably have
Like-
10 renters as soon as you build whatever you're going to build.
Exactly.
And they want to live in a pool house. You just have to charge them more if they want
It's
to go in the
amazing.
pool.
People really are. They just can't find housing. now.
Nothing.
No, it's crazy. And then
incredible.
you
They're
have
paying
like
crazy amounts of
kids,
money.
like, you know, your
Yeah.
kids are getting a little older
Yeah.
now. You know, keep them home. Have a little house in the back for them, you know. It's like
They never
Maybe
leaving.
not.
They never
They're
leaving.
okay where they are.
He's like,
you
nah.
know, my mother-in-law, I get along with her lovely now, but the minute I don't, I'm going to see you. It'd be like you're moving out to the backyard.
Pool house.
Yeah. You have
No,
60 days.
That's right.
Pass her a
Full
notice.
eviction
Right.
notice.
Eviction notice. You have 60 days to move to the pool house.
That's
So
funny.
now, like,
Gotta
we
get that pool
we're
house
we're
built.
also thinking of like building a garage. So is there any advantage of like not like just saying, yeah, we'll do that second
Yeah, you
floor
can
now?
put
I would do the
second
second
floor.
floor on it.
Second floor is
Because
a
I
good
don't think
idea.
the garage aspect of it counts towards the square footage.
Right.
So I would do it
There's
and get the
probably
garage
a
out of it.
benefit
what you
in
need to
doing
do,
like
yeah.
the loan
Because
under,
the
like this.
foundation, you're going to build a foundation for the
Right.
garage anyways. You might as well just go up.
Yeah.
Nice.
Yeah.
Yeah.
Does it have to be connected to the home? Could
No.
it be in the? So it can be like you said, the pool house. So
Yeah,
that
as
answers
long
my
as
question.
you have the room and like the, what is that called? To the lines.
Yeah.
Yeah, like your
Oh,
lot
that
lines.
clearance,
Yeah,
like 10 feet.
Yeah, I think it might be 15, but yeah, it's like that.
10 in some.
Oh, really?
Yeah, because
Oh, wow.
we were looking at
That's
building a
close.
garage.
That's close.
Yeah, yeah, but
Yeah.
well, because we had an existing garage that we tore down
Oh.
because it wasn't safe. I didn't want you to get hurt. If
Yeah.
You pulled up your car in the garage.
Oh. Thank you for
But I
thinking.
He was
thought it was-
concerned.
I
Yeah, that's nice.
thought it was 10 in Somerset, but
It could be.
Someone will call us and let us know. But oh my
That's great. That's a
God.
lot of really interesting information that I bet I didn't know about.
It gets the wheels
Okay,
turning
yeah, it
for
does.
sure.
Yeah, because
Makes
we've
you
thought
think.
about so many different things over the
Right.
years, and that
Yeah.
always stopped us. Like, we won't get approved. We're not
Yeah.
zoned right. We're not this. We're not that.
Yep.
You know, and now it's like poof, it all went away, and now it's
Yeah.
like super easy. I like this.
Yeah, it's definitely something to think about and take advantage of, especially for the people that wanted rental property but didn't want to like have it far from their house or in a different state or whatever it is. Now, if you want to be a landlord, not a huge landlord, but to
Yeah.
one person and not be far from the unit to where if somebody
Right.
needs something or needs something taken care of, I think it's huge because that could get your foot in the door and be like, oh, this is easy. Now I can buy other rental properties.
No, it is huge. And just like if you ever want like a smaller place too, like I can envision like moving in there if I'm older and
Yeah, and then just rent
whatever,
out your house.
you know,
Right.
and then just have like
Yeah.
the kids live in my house because I would still need something like, hey, do the
Yeah.
grocery shopping for me.
That's
But,
perfect.
you know, like there's so many conveniences
Yeah.
to programs like
Because
this.
it used to be like the in-law, like
Yeah.
people would build a house with an in-law, but then you couldn't like have it as they were trying to build separate entrances, and they're like, well,
Right.
you're clearly trying to build a 2-unit.
Yeah.
You know what I mean? So that kind of gray area is more. It's easier to do now.
Do you have to technically, like I know there's qualification stuff, but you had mentioned the HELOC and what have you to finance this. So what are the qualifications like different than this? Can you talk about how someone qualifies for
Yeah.
the build on this?
I mean, the home equity line, it really just comes down to have enough equity and then enough room in your budget so that once you borrow all of it and build it, you can still afford that payment and your mortgage payment, which is crucial. You know what I mean? Because like if you borrowed $100,000 to do this ADU, the payment isn't going to be like $200. It's going to be, it's interest only for the first 10 years, so it will be small, but we have to qualify on like what the payment turns into, principal and interest at year 10, and make sure you can afford that. But the reno aspect of it really is like we can get creative because it's a BayCoast product. So if you have a little bit of equity in your home now and it's worth $500, you owe $400, but after building the ADU, it's worth $700.
oh yeah, right.
Then we can use that future equity and say, hey, we'll still finance it and we'll pay off your current mortgage you have and we'll just make a new mortgage so you just have one payment. We'll give you the money to build it because we know the house is going to be worth $700 after you're done with this extra building.
So the ADU can be up to 900 square feet as long as the initial building is more.
900. Yep.
And then someone's going to try to put an ADU on an ADU at some
Of
point.
course, yeah. There'll be people doing some crazy stuff. You know
Back
that.
on the ADU.
Yeah.
You have ADU
I'm sure
to
there's
the
some
third
laws
degree.
that
Yeah,
say
I haven't. I mean, we're very familiar with it, but I haven't like read the whole like docket of what changed. But I do know the facts to guide people to the contractor who knows the law in how it changed and what they are
I'm sure
allowed to
there's some
build.
safeguards there.
Oh, for sure. Like you probably have people trying to rent out multiple bedrooms in 900 square feet and stuff like that.
Right.
But like, I mean, people need the rent so to afford their mortgages or their whatever they're in now. So I think it's in a positive direction. You'll always have the people trying to take advantage
Seems
of it.
that way.
Yeah.
I wanted to ask you also, there's a lot of people probably listening or watching this, and they're wondering, well, it sounds great, but my credit's not that good. Mm-hmm. I really have crummy credit. I made some bad choices in the past. What do you do with that?
Definitely. So I work with people every single day. So just to get any mortgage to purchase a home, you really can go as low as 580. So a lot of people think their credit's bad and it's still 590, 620. And even if it's not quite there yet, we can get people's scores up very quickly because it's a lot of small things. And I have a program that I utilize every single day that can give you an exact plan. And it's not just like, well, maybe this account, if you paid it down, like, no, it's to the T. Like, you pay this account down to this dollar amount, you pay this off, and it tells you exactly how many points your score will go up in a short period of time. So, and that's free. So
Amazing.
we use it. Use me. I love saying that because it's use me as the tool to do that. Because if you went to a credit repair company, they're going to charge you an initial fee. Then they're going to charge you monthly. And then they're going to want to do it for 6 months because it's going to take time for them to do it. So use me as the tool because eventually you want to get to qualifying you. And that's where my job becomes rewarding. So if I have motivation to get you to the qualifying credit score and there's no charge to you for it. So let's work together to get you to that point. That way we can get you in a home.
So,
Mike, what's the timeline for a bankruptcy?
So 2 years, you can do an FHA loan after dismissal or discharge. And then conventional, it's 4 years.
okay.
So, I mean, 2 years goes by pretty quickly. It also depends on Chapter 13, Chapter 7. 7's where it wipes out all your debt. 13, if you're paying on it and you have all on-time monthly payments, you could be quicker than 2 years if you're making on-time payments and following the plan of the Chapter 13.
That's good to know because some people have struggled, especially during like the COVID years and stuff. And
Oh, yeah.
it's nice to know there's still like options.
I have people with Chapter 7s that bought like literally 2 years, 2 months, like right after. They knew the day, they knew the dismissal or discharge date, and they were like, all right, I'm ready. And they called me. Their score was above 580, and we put them right in.
Nice.
I know that, we talked a little bit about how you help people with credit issues just now, but what else sets the mortgage company apart, would you say, compared to, other companies out
Yeah,
there?
definitely. I mean, the fact that we know the community, we're in the community. I mean, obviously local lenders, they know the market, but we're banking in this community. So we're helping realtors, we're helping the clients. We're also banking with most everybody around here. Somebody has an account with us, their mother, their father. We have the insurance solution. So like we can kind of coach you in all aspects as other lenders or banks are like, okay, well, go get insurance and let me know who you choose for an agent. Oh, go get a realtor and then connect me with them so that we can get on the same page together and I'll give them the pre-approval letter. So we're kind of, when people have that initial conversation with me, I'm like, here's 5 trusted realtors that I work with on a daily basis, a title attorney that works with us all the time, and BayCoast Insurance that you can do your car and your home through. And like, when your deposits are with us, you can walk in a branch. It just kind of sets us apart. Everybody, when I walk in a branch, I'm most impressed by, they'll have 10, 15 people walk in throughout the morning in like 30 minutes, but they'll know everybody's name. It's wild.
Yeah.
And I've worked in banks for over 15 years, and it's never been like that.
No, it's nice. It's
Yeah,
nice when you
it-
walk in
it
and
is
someone
different.
knows you because you feel like special.
It is.
you
It
know
does
what I
feel
mean?
different. Like when you're just like next, and you're next, and you doing your but like they actually like ask questions and like know people's lives. I'm like, that's
Yes.
awesome.
And that just happened. I walked in like a week later and they were asking me about my daughter's wedding.
Yeah.
I'm like, whoa.
That's-
I'm like, you remember?
That sets
Thank
them
you."
apart. Honestly,
Yeah,
I don't.
it's very
I mean, I'm sure there are banks that do that, but
Yeah.
when I'm in the bank and I can hear it,
Yeah.
I'm like, damn. Maybe
Yeah.
I don't talk to the tellers enough. Like when I go to the bank, you know what I mean? Because I just kind of like we chit chat, but it's not
Yeah.
more than that.
Right.
And I'm like, how do they? Because I feel like the crowd that still likes to bank in person or business
Yes.
clients, they're talking the whole
Yeah.
time, and then they're asking questions. It's just different. I feel like they care, and it's easier to go to bat when something is
vibe.
wrong.
It's nice to have that personal connection.
Oh yeah.
Absolutely.
Yep.
Absolutely.
You know, it's interesting
100%.
in Europe, they're moving away from having
Physical
people go
locations.
into banks.
Yep.
So I've had some experience in Europe where if you go to a bank, they want you to do it all basically remotely.
Yep.
And if you go into the bank, if you go to deposit money, they don't charge you.
Yeah.
But if you go to do other services, they actually charge you because they don't want to take teller time away. And they
Yep.
only have like 2 people working
Yeah.
in the bank. It's a really interesting concept.
It's coming to U.S. because you have some of the biggest banks, without naming them,
Yeah.
their physical locations are disappearing.
Right, and then if you go in, they'll probably have charges soon.
Yeah.
They'll want you to do it all online, which is hard for some people.
Well, I don't like
wild.
that because my
I don't like
money's
that either.
hard earned, as is
Yeah,
yours and
I agree.
yours. And if I'm doing something with it, I need the confidence and that like one-to-one
Yeah.
personal approach. Like, okay, I'm going to give you this
Without
but
like
are you
outing
safeguarding
people.
it?
It's
Right.
funny is like one of my biggest referrals who refers me like a lot of mortgages. He is a regional or branch manager at another bank that
Right.
is getting out of the mortgage business. And it's
Yeah.
one that's in US and Europe. And they're surprised when the client's like, "You're telling me to go to another bank?" And he's like, "Yeah, he did my mortgage at BayCoast. Mike, you got to call him." And he's the manager. So when I get that referral, they're like, "I'm so confused, blah blah blah." At what told me
Right,
to go to
right.
you, and I'm
Until they
like,
talk to you
I'm
for
like,
20 minutes.
yeah, and they're like, "Oh, okay, perfect." But like, we almost like steal their business because
Yeah.
Yeah.
why would they deal with somebody who's referring them to other banks to lend them money,
Right.
and their money's with them? It's
Yeah.
wild.
That's a strange
Yeah.
thing.
Yeah.
No, but it means a lot. Absolutely.
I think that personal connection, it doesn't take a lot, and it really does feel a lot different. That's kind of why Bank of America changed. It's not personal, but you still have people staying there because they just have had an account for 20 years, but like they're like, I need to switch. I need to talk
Yeah.
to somebody.
Yeah.
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 It's fascinating.
I'm going to rewind for a
Okay.
minute, just getting back to repairing credit scores.
Sure.
Can you give us like the top like 2 or 3 tips like that people can start doing today that will help them with their credit scores?
Yeah, definitely. I mean, it really comes down to, like we touched on before, the balances of what you have on revolving credit, which is credit cards, home equity lines, anything with like you're able to borrow and pay down. On those, you really want to stay under that 30, 25, if you can, % of what you're allowed to borrow. That is the biggest part of your credit score. You obviously don't want your credit pulled in excess, but it's a necessity of getting a loan. So try to limit the times that you have your credit pulled. If you do incur a late, which would be 30 days, over 30 days past the due date. So some people think like it's due on the 1st, I paid it on the 6th, I'm going to get a late. No, it has to be the 1st of that following month, you pay it after that. So you may pay a late charge at paying it on the 16th, but it's not negatively affecting your credit score because it's not 30 days late. So keep things within 30 days of their due date. Keep those balances under the 25% mark of what you're allowed to borrow, and just pay things on time. If you do have open credit and it's open credit that you don't use anymore, but you've had that card for 20 years, it's not the best one to close, even though you don't use it, because you've built up all that credit history of having that account and it's never been late. As soon as you close it, it does negatively impact things. So if it doesn't have an annual fee, then try to keep it there. You know what I mean? If it does and you're not using it, then don't pay an annual fee just to keep it open. But
so many good cards out there.
and then just paying things on time. It really comes down to that, and just utilizing credit. Because the way I best explain it is, it's a snapshot when someone pulls you credit, it's a snapshot of that moment of what's going on in your life. So, but credit is built over time. So it's over time, the more you do the right things, the more solid your high score is going to be. So like if you always keep it under 25, you pay your stuff on time 5, 10, 15 years, it's going to be harder for you to ruin your credit off of one late. But it is over a long period of time. So if you have somebody that's 18, and they only have 2 trade lines and they just became late, their score is going to get hit hard because that snapshot is small and it's got a negative thing on it. And it's only 2 trade lines. So it's basically how you responsibly use credit.
Okay.
That's what it is.
If you have a loan and you take a lump sum of money, let's say you have an inheritance and you pay off that loan, does that hurt your credit?
No, paying something off won't hurt it. You're never going to be like super negatively impacted by that. Having less debt is just good for your credit score.
Okay.
So paying something off in full wouldn't matter too much. But if you habitually are like someone who is always trading in cars and taking out loans, sometimes it's harder for them to get to that peak credit score because they always have new credit and new debt. So their trade lines aren't that old.
Okay.
Yeah.
There's one financial guru out there who I'm not going to name, but he's
Yeah.
like, you don't need credit cards. Pay cash for everything. Have a 0 credit score. What's your
Older gentleman?
Yeah.
He's very smart. Honestly, I listen to him sometimes, and it's good advice to somebody so they don't get into a situation.
How feasible is that, though? I mean, we all need to sometimes. You're
Yeah.
not going to pay for your house with cash unless you just you're in a
Yeah.
unique situation.
Well, I think in mortgage situations, he agrees with like borrowing because it's your biggest write-off.
Yeah.
Right.
But he definitely is talking about the people who are susceptible to using credit cards.
Okay.
They justify it with rewards, don't
I
pay it
see.
off monthly.
Yeah, okay.
So now they pay interest to get the rewards. And then that balance just keeps rising because it's a tough month. You know what I mean? And all of a sudden you're in 20,000.
Statistically, too, I think like over 80% of people, it's a high statistic, whatever it is.
Yeah.
that people don't pay off their balances every
It
month.
might even be higher than that,
Yeah.
honestly. Yeah.
What's the highest credit score you've ever seen?
839 maybe? 839, I think.
Oh, pretty good.
That was years ago. But when someone does have above an 800, I do make like a big deal out of it. I say I pull like 10 people's credit a day and I don't see many 800s. You got it. And so like it is good to have those conversations because people are like, oh, look,
Yeah, check mine out.
I'm doing good. Yeah.
I always like, you know how you have like credit cards
Credit
and then
Karma,
like you
yeah.
have
Yeah.
even Credit Karma is one that I do check, but even like a lot of the credit cards now they'll give you like free credit
Yeah.
scores.
Yeah.
Like it's part of their little
So
app.
it's their own algorithm, but it
Yeah.
should be pretty
But
close.
it's based on like what are the 3 credit
So they'll like partner with Experian
Yes,
so that they can use
exactly.
their name,
Yeah.
but it's usually their own algorithm. That's why when someone pulls your credit, like
that why?
a mortgage company, and you'll be like, I just showed you it's 740, and then I pull it and it's 690. They're like, oh, it's because that credit card partners with Experian or Equifax or whatever it is in advertising to use. When soon as people see that TransUnion Experian name,
Yeah.
they like that is my FICO credit score.
Yeah.
It's close. It's probably very close, but it's not the same algorithm. Yeah,
Well, I'm not 800, so
you might be though.
I just checked them. It's not bad.
Could be
though.
their own algorithm. You just
Yeah,
never know.
right.
My son and I have a thing who has the highest credit score. So when I reach those
Yeah.
magic numbers, I like screenshot it and send it to him. I'm
Exactly.
like, I won.
And they get that. That's why you get that email that says your credit has moved. You know what I mean? Monthly from whatever
Yeah.
service that you have or the credit card.
Sometimes it dropped 5
And you
points.
check
You're
it.
Like, why did it drop 5 points?
Yeah.
It did nothing different.
They want traffic.
Yeah.
And
so-
they'll tell you whatever it is it needs to be,
right,
and
right.
and it gets you to their website.
Exactly.
Yep.
So, wow, it's been an hour already.
I know, and I just think that you blew my mind with all that
I
accessory
like that.
dwelling.
I mean, that's my goal. That was my goal for today.
yeah, you succeeded, successful.
So-
Yeah.
Yeah.
I have to read a disclosure before the end of the interview,
yeah,
which
get
I
that
think we're
done.
drawing to the end. So,
Yeah.
BayCoast Mortgage Company, LLC, NMLS, number 1082048. BayCoast Mortgage is an equal housing opportunity lender, Rhode Island licensed lender, exempt from licensing in Mass and Connecticut. Home equity lines of credit, HELOCs, offered through BayCoast Bank, NMLS, number 403238. All loans subject to credit approval.
You nailed
Awesome
it.
job.
All right.
You nailed it.
Pretty good. And where can our audiences find more information about?
You can contact me. My number, I honestly answer the phone 24/7. It's 774-319-2099, or you can go to baycoastmortgage.com.
All right.
Yeah, you guys have a great website.
Yeah, it's super smooth now. Marketing does a great job with
very
it. Super
educational.
easy to navigate,
Yeah.
especially on the services. A lot of information on it. It's perfect.
Nice.
Well, Mike, thanks so much for being here.
Yeah,
This was great.
I love
learned a
coming
lot.
on. You guys are great.
It really was awesome.
Yeah.
And it was, I'm sure, very educational to those who will be listening and viewing this. So
Yeah.
thank you, everyone, for listening to our show. And if you'd like to become a sponsor, please contact us at 617-775-3737. Special thanks to Ron Gamache. Sorry, Ron. For our intro music, Primary Care, your trusted medical providers in southeastern New England, and the BioSkills of Northeast for producing our show, and available to produce your show by calling 774-301-8811. BayCoast Bank, just right for all of your financial needs. Visit baycoast.bank or call 508-678-7641 to learn more. And Duncan Hearing healthcare you can trust, with sites in Fall River, Dartmouth, Falmouth, and Centerville. For more information, visit their website, duncanhearing.com.